The following is a presentation of TFNN. The Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, right here on TFNN.com. Let's get a current market wrap on where the markets are at right now for your lunchtime market wrap. We got the Dow coming down 145 points. That's right, down 145 points on the day. And, of course, all rolled over to the March here on the indices contracts. And even that move, like a lot of IV built in, obviously, from yesterday's activity. It's bouncing right off one deviation. And let's take a look at that Dow chart real quick while we're talking about it. Bring that on up, and I'll shrink down some other stuff here. It's not quite as important all in and of itself, but you can see we've been bouncing off one deviation right there. That's a one deviation low move, and it actually went on down and pretty much hit the one deviation mark itself. But there at 17,465. I think we had a low like a 17,780. But remember, I measure deviation from high to low, not just from settlement to a one deviation move. And I'm not measuring standard deviation because that is historical price movement. I am measuring actual implied volatility-based deviation moves. And that's where our Dow is sitting at right now, just hanging out, chilling out right there at the one deviation level. So with that in mind, let's see here. Let me check one thing real quick. We got, like I said, a deviation move right there on the Dow, down 145 points. And got some nice trend moves built in with that. So hopefully you caught some of that and that move on down. We got a call in from Jason from New York. So how can I help you out, Jason? What's going on, man?
Hey, Darrell, how you doing?
Hey, I'm doing great.
Good. I had a question. I understand how, your money management with the binaries, but what's your general rule when you're trading the futures as far as moving your stops and your risk management as far as when to get out of a trade? For instance, on an oil market, what's your risk tolerance? What's the max you'll go? That's really what I'm trying to get a handle on here.
Okay. Well, that's several questions in one. Some good ones, too. First one is your risk tolerance obviously is different for everyone. For me, look, if I get down more than 5% in a day, I want to stop for the day. Okay, that's just one, like that day you call it, walk away so you can come back tomorrow. So I try to not risk more than 1 or 2% of my account per trade that I make. So based on whatever that amount is, then that would help me determine, okay, then I can find out where my stop is. Okay, so let's say, you have, I don't know, we'll just say it, let me pull up a calculator. We'll make it easier. And this is where I like things like spreads and stuff like that because you can more control your risk a little bit better. But I'm just going to make up a number for a second. All right, so let's just say somebody has $20,000 in an account, and they're willing to risk, we'll just say 2% a trade. So they can risk $400 a trade. Okay?
Okay.
Let's say where you set your initial stop in, and let's just talk oil futures at the moment. Since talking about oil, let's say it's 20 ticks away. Okay? So if your stop was 20 ticks away, that's a $200 risk, right?
Okay.
So $10 per tick. So therefore, you could trade 2 contracts. So what I do is I don't base my stop on my risk. I base my size on my risk. So how much am I willing to risk a trade? Where is my stop on this trade? That defines my maximum risk that I'm willing to take. And then that lets me know the quantity I want to trade. So you have to always start off going, how much am I willing to risk or trade? And then what's really cool is sometimes you get like these really tight trades that are 5 or 10 ticks. Well, then you can go and you can do 4 or 5 contracts, So if you're worth $400 and it is only a 10-tick stop, then you can end up doing 4 contracts. But I always want to make sure that I base my size off of the amount of risk I'm taking, my risk off the percent of my account that I'm willing to actually put at risk on a trade. And then I want to choose that stop based on price action. So I am a big fan of starting off with like a swing high or a swing low on a trade. So, for instance, let's see here. I got a chart of the Dow up just at the moment. But let's say I'm looking at this and I see this is a downtrend. I'm looking for a breakout. It went down, it pulls up. I'm looking for it to break back. Let me draw a line. It'll be a little easier if you're able to watch on the charts. But basically the market, is going in a downtrend. It pulls back and makes, higher lows. Okay?
Mm-hmm.
And I'm waiting for it to break out of that low to hop in the trade. So now the furthest stop I would possibly use would be like that swing high since that point. Okay?
Okay.
But then I'm going to immediately have some sort of indicator, and this is more just for objectivity. It's not that there's a magic indicator. I mean, I found some that I've made that work better than others, but something that is sort of a trending style indicator, and I use what's called an MVP predictor, but that's what these little triangles are, and then I trail my stops with it automatically. So it goes down, 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 down. And then when price hits it, then I'm out of the trade. So that way, because if I have found if I don't find an objective point to put my stop first out of the gate, then I will risk way too much money because I'll want to be right. And so I have to say, if it hits this, I'm going to define myself as wrong on this trade and be okay with that. And then that lets me not overtrade my account, not let my losses run, and not trade too many contracts. Okay?
Okay. And
then I have to have an objective method that says, how am I going to handle a winning trade? Because most traders, like probably in the high 90% of traders, are not very good at handling winning trades. They cut their profits short because they're so happy to finally see some green, that we're like, oh, it's up. I made $200. I'm out, or, whatever. And I mean, those are the days where you can make thousands, but you're like, hey, I'm just glad I made 200 because it's so much more pleasurable to take that profit and feel good about it. But what I found is I make a lot more money if I will trail my trades objectively. I do give up some of that money. I'm never going to get the entire trend. One thing I learned from Alexander Elder, I don't necessarily agree with everything in his book, but he has some good things. It was like one of the first books I ever read called Trading for a Living. And one of the things, he talked about was the best traders are trying to get the middle third of a trend. And if you can get the middle third of a trend on a consistent basis, you can be a very, very wealthy trader. And if you consider this trend right here that I have on my chart, went from like 16,730 all the way down, you could say 17,496. All right. And if I was actually doing this trade, I would get in at 17,583 and I would get out at about 17,540 or so right there, maybe a little bit lower. So maybe a little more than a third on that one trend, but I'm objective. So that I have an objective entry, like when it goes down, I'm going to do it when it pull back. When it breaks the low, I'm going to get in. I'm going to put my stop at the swing high. And then I'm going to immediately start trailing my stop with this MVP predictor, which is basically a modified SAR. Okay, so you could start out with that if you don't have access to it. But the thing I don't like about SAR is it flips back and forth way too much. But there's, I don't know if that helps. But start out with a defined stop. Let that defined stop then calculate what your risk is. If it's too much risk, then either you need to trade a smaller tick value contract, like instead of an oil contract, maybe you trade a mini oil QM, or maybe you trade an oil spread, which is $1 a tick. That way, you can basically have, let your stops be determined by the market, by the price action, not by your account size, which means your markets that you trade may be determined by your account size. And then your ratio contracts, your number of contracts is based on what that risk is. And then when you execute, you place that stop, you live and die by that stop, and then you trail it objectively to allow your profits to run. Now, that's for obviously trend trading, not scalp trading. But for trend trading, that's the exact method I use to manage my risk and manage my profit.
Okay, so I understand. That's great. When you're trailing the stops, you're basically, like you said, you're adjusting it based off the market conditions then.
Right. So, like on the chart I have up now, I'm not sure if you're able to see it, but on the Dow here, see these little red triangles?
Yep.
Okay. And basically what I'm doing is I'm trailing with those red triangles. And eventually they become faster than all the other indicators on the chart, but they give a lot of room for the market to breathe. So I don't get knocked out at every oscillation, because that really is annoying when you're trading, right? So the market bumps up a little bit and then flies down and you're out of the trade. So it gives enough room for the market to breathe, but as the market really starts moving, it really starts moving. And then eventually will actually flatline. And that's usually when either it's going to oscillate and pop down, or, I'm better off waiting for the next entry. So I would literally what I do is I put it 3 ticks above, and I just trail it on every bar, every closing bar right there, and I just trail it all the way down. And it's very, very mechanical how I trade. So it's not emotional. I'm like, I'm just, okay, move the stop. So, and here's another trade doing the exact same thing over here on the right side of the chart, that's going on right there. Get in, everything lines up, basically a whole bunch of red stuff. Breaks by 3 ticks, I get in, I have my stop up here at the swing high, and then I just start trailing it, 3 ticks above that predictor, and eventually, let's see, over here somewhere, we're probably going to get out the trade. Yeah, we got, a small profit on that one, but little profit right there. And then it goes into a long trade, doing the exact same thing. And I'm okay with missing trades. I'm okay with getting small profits. I'm not okay with taking a loss larger than I should have because I didn't find it up front. I'm not okay with getting in a trade late and what would have been a winning trade if I would have followed my rules turns into a losing trade. I'm not okay with missing out on a massive profit because I didn't objectively trail my trades. I'm okay with missing out on a big move. I just don't want to miss out on it because I got scared and took the profit early. So that's why, for my discipline to overrule my own emotional deficiencies that we all find we have in trading, I've had to find very objective methods for trailing my stops. And by the way, my stop trail, whatever that is always different than my entry rule. So whatever I'm using for entries, I'm not using for stops. So like I'm using these little triangle things right here. Like I said, I call them momentum volatility predictors, but MVP arrows there. I use those for my stops. I don't use them for my entries. I use other stuff for my entries. So, and I got 3 different ways I enter. But your main question being about stops, that's how I move my stop. I objectively trail my stop down. And then if I want to get all master the market thing going on, then I will look at what I call ICE or deviation levels. I talk about deviations a lot. And those are points where I may decide to take profit. So did I help you out, or do you got a couple more questions?
Absolutely, Darrell. Thank you for your help. I appreciate it.
Awesome. You bet. Anytime. Thanks for calling in.
Okay.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're going back here to the Diagnostic Trading Hour. So going through and checking out what else we got going on in the Dow. Like I said, down 114, down 120 points right now. So we move on over and pulling back up a little bit off of, again, that bit of a one deviation low move. Still sitting at a one deviation high to low at the moment. So, and, they're sort of oscillating to some small trades right here. It's really trading between the ranges right around a deviation. So giving some great shot trade opportunities at the moment. And let's see here. What else do we have going on? I want to give you an update on a variety of the markets. Let's see here. We got the S&P is down 18 and a quarter. Let's pull up the S&P charts. Oh man, I got blocks all over this thing. I need to clear this thing off. Anyways, we'll look at it. It's a little hard to read. Anyways, it's down one deviation at the moment. There's a lot of red, a lot of selling, a little bit of buy bounce backs along the way, but so far it's been very, very heavy right now in the sell side zone, following the day right after Fed funds rate and giving some beautiful trends all the way down. Like I said, I got to clean that chart up. Okay. Coming on over here, let's see, we got NASDAQ. So for you NASDAQ traders out there, I know that's one of Tommy's favorites is trading the NASDAQ. He loves those Qs. And let's see where it's looking right now, what we got. It's like it moved down quite a bit. We're currently sitting at a negative pretty much 30 points on the day. We were down a full deviation a little bit earlier this morning around 11 o'clock. And it's pulled back up off of that right now. It's sort of oscillating between 0.5 and 0.7. And right on upper ice. So we got some upper ice levels. We do have some institutional blocks down here really holding things at the 1413 level and at 1410. So there's some definitely resistance of 1413, 1410 going on. There's some large institutional block orders holding things in place on that lower side. So we may have seen our lower action for the day. It's going to have to push through some pretty heavy volume to be able to keep on dropping down. But that doesn't mean that we can't have some fun in the chop in the meantime. Right there between 46.20 and 46.30, you got 10 points of fun movement that you can play right in between those two levels. Hopping on over, looking at the Russell. And let me pull up the Russell right now, see where we're at. Doing the same thing. We're in a chop zone. We're chopping right between institutional zones, those green and red triangles you see right there on my chart. And it's playing right now between 11:33 and 11:37. It's sitting on lower ice. And Psychic has a block order line right around 11:36. So that lines up with the negative 0.5 deviation level as well. So right in between there, 11:33 to 11:36, a little tighter range, about 3-point range. And, I said sitting on lower ice with a block level, price level, and an institutional sell zone right up there at really 11:37 is where that level's at. The institutional block's at 11:36, and the zone is at 11:37. So, about 3-4 points. And it's going to come down, looks like on this one. It looks to hit that ice level again. Once we get a confirmation arrow to the upside, things start turning around, then you have some trades that you can do and look on how to go on back up with a pretty small target. Unless all the stars align, we got a pretty small target taking you back up. Let's see here. Looks like to 11:38 on that one. So, all right. What about some of our other contracts? Now, oil's been a fun one right now, and oil right now is it's a little quieter today, down 66 pips. We got natural gas is down 5. We got silver down 0.568, getting a beating. Let's see here, going over to gold. Gold is down 27 points. So again, the gold, that's a massive move. Let's see if we can pull that up. Give me 1 second. There we go. And so what we got on gold right now, down 2 deviations. They're at a 2 deviation level, just sitting on that level right now. Got a lot of block orders right there at the 2 deviations where some people are getting stuck and trapped right in there. We'll talk a little bit more about gold when we get back. Stay right there. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alrighty, pardon me. Alrighty, folks, we're going back here to the Diagnostic Trading Hour. We're looking at gold. Gold sitting right down and really trading right between its block zone levels right now, sitting at a -2. That's -2 deviation level. And big moves on gold. Not a big surprise. Day after a Fed funds rate. You were talking about this yesterday on Tommy O'Brien's show, saying, hey, you know, it could bounce up because flight to safety isn't necessarily the bond market since interest rates are rising. And but the markets were rising pretty good yesterday. They're falling. Gold sort of seems to be trailing with the markets lately. Markets falling, gold's falling. If the dollar is becoming more valuable, then theoretically, you know, theory doesn't have a lot of strength in the reality of the, you know, trading world. But theoretically, then gold should go down. And it's coming on down right now, down to, you know, breaking below 1,050. And came on down earlier to, 1,047. Let me back up a little bit. Let's see where all of this price action came in. Now, remember, this is pre-Fed funds rate when gold was released. So when the Fed funds rate was released yesterday. But where we really saw the price action, that's what I'm trying to get the chart to cooperate with for me. There we go. Okay. And there. Okay. So we really saw the action on gold kick in this morning. So at 8:30, it was already down some. It moved down to about 0.7 deviation from settlement, which is, again, 130 yesterday, pre-Fed funds rate. So it already had basically about a deviation move before the market even opened. It had actually exactly a 1 deviation move before the market had opened. And but it just continued on that solid downtrend, just getting pounded down all the way to a -2 deviation level, and that's where it nailed the -2 level, and it's really just bouncing in between -2 and 1.5. Hadn't quite been able to reach back up to the 1.5 level yet, and not really a chop trade. I guess, I mean, could barely, it's a big zone for a chop trade on gold. That's a $600 zone. But if it was going to chop around, then we'd be looking for right around 1,049, and moving on up to, right about 1,053 would be sort of the ultimate chop layer. Or you could just play between the dev zone and the next chop zone, 1,083. So 1,049, 1,083 for, $400 scalp trades. So again, always wanting confirmation on that, but I'd be careful on this one right here. I mean, just come down to 2 deviations, things don't act as normal when you're at that 97th percentile of movement, and 3 is 99.7 percentile. So we're at a very low probability of continued further move. Doesn't mean it doesn't happen, but we are at that point right now. So it's either going to take some strength to the upside, or it made us sit right here. We'll see what kind of other news flows out of the world. We'll get on over. We got corn and soybeans right now. Corn is pretty flat along with soybeans. Corn's down 3 points. Soybeans up 3 points. No massive news there. Going on over to our copper markets. Copper right now sitting down 0.0835. We got the Aussie yen is down 94 pip. And we have the pound dollar currently down 105. Euro pound down 15. The pound yen is currently down 71 pips. Got the euro yen down 73. Dollar CAD up 173 pips on the day. We'll go over to the dollar franc. It is up 81. Dollar yen is down 50. And let's see, VIX moving back up into positive territory, up 0.53 right now on all this down movement on the indices. And what does that leave us with? We got dollar index in positive territory. The dollar greenback showing a little bit of strength. And bonds are also positive. Euro dollar sitting down quite a bit, 102 pips down, dollar gaining strength against it. And that is your lunchtime market wrap for the day on the markets and the charts and where they're sitting at. All right, so next piece we're going to go into, we need to check out our news that you can use, trades that you can set up, and get you ready for what's left of the coming week. We got Fed funds rate yesterday, and let's see what we have today that may set you up for a good possibility. So, all right. Going on in and looking, let's see here, on the 17th. Let me pull that up, get a little clearer view. Okay. Tomorrow, let's see, tonight, what do we have tonight? This morning we had Philly Fed Manufacturing, not a big deal. Tomorrow, we're going to have the Canadian, several Canadian reports come on out, various reports, and we'll have released as the CPI, core CPI, and wholesale sales reports are coming on out between 8 a.m. and 10 a.m. Usually a pretty flat one. It's a Friday, and this is when people are going to start going on vacation, by the way, for Christmas next week. Variety of holidays out there, but this is what, banks are going to be closed next Friday. Some will be closed next Thursday. A lot of exchanges closing early next week. So just be aware that's going to start, and that's, obviously not global, but it is, in a lot of, European countries, Australia, obviously North America, things like that. So anyways, but entering at 8 a.m., going to 10 a.m. for a $30 minimum profit right there. And that is our Iron Condor setup for Friday. For next week, what do we have? Nothing else major coming out over the weekend because everybody is on holiday. The Bank of Japan will have a holiday next Tuesday, so be aware of that. On the 22nd, We're going to have a U.S. final GDP. This is final, so it's not as big of a surprise because it's sort of after they've released, advanced and pre and all that other stuff. So it's usually like, okay, yeah, whatever. And a pretty usual flat market on that trade is about a 35 pip move on the Iron Condor, on the euro dollar from between 8 and 10 a.m. So we're looking for a $35 minimum profit on the trade. Another trade starting an hour after that from 9 to 11, U.S. existing home sales and Richmond Manufacturing Index. I am going to say put a word of caution on this Iron Condor. This does work often, $30 minimum profit on the euro dollar from 9 to 11. But based on what happened in the Fed meeting minutes where they were talking about home sales and manufacturing declining and how manufacturing had a major decline in certain sectors, I would say that you would I would use caution on this normal Iron Condor trade. Going on into the pound. We got the pound on the 22nd here, 11 p.m. to 7 a.m. They got their current account, final GDP, and index of services and revised business sentiment, all being released at the exact same time at 4:30. Nevertheless, still not a major mover, about 30 pips between 11 and 7 a.m. That night, that's an entry on the 22nd in the evening for a 7 a.m. expiration on the next day of the 23rd. On the 23rd, we're going to have a variety of CAD reports coming on out. Core retail sales, and GDP. Dollar CAD, $30, okay, is what we're looking for right there. $30 minimum profit on that trade of core retail sales, and GDP. And let's see, we got a 9 to 11 on the new home sales. Again, I'm going to say use caution on this one based on the FOMC statements because they are very, very sensitive. That new home sales have been declining. So that's going to cause more attention than normal to be focused on this report. So we could have a little more volatility than we usually expect. So use caution on the new home sales, $30 on Condor. That may not be enough this time around. Of course, we'll have our weekly oil inventories coming on out. And it looks like they're still scheduled for the same time with the holiday. And looks like natural gas is still scheduled to come out next Thursday as well. Year-end monetary policy meeting minutes are going to be happening at 6:50. Nadex should be closing pretty soon around there. And then if we go in, obviously on Christmas Eve, Germany's going to be closed. New Zealand banks are going to be closed. Australia's banks are going to be closed. And let's see here. U.S. employment claims will still be coming out at 8:30. Most of the markets will start to be closing down early, shortly after that. And then yen will have some more reports that evening, and I don't believe Nadex will be open that evening. Then on Friday, France, Germany, and Italy, and Switzerland, and Britain, and Canada, and of course the United States will be closed for Christmas Day. Be aware, okay? Do be aware that trading volume is significantly different leading into a holiday. So the big news that everybody was waiting on is out. The FOMC meeting minutes have happened. There's no major expected federal news for the next 2 weeks that should have any massive impact unless there's, government shutdown or something like that happening in the middle of everything. Because I know they're doing extensions and fun stuff like that. So they may play some games there. But they usually figure it out, especially with an election year. That's the last thing they want with their already low Congress approval ratings. So volume is different. What does that mean? Well, lighter volume, lighter liquidity can mean that markets can move fast. So you'd expect it to mean that they're going to be slow. And yes, they will be slow. But then they will move like lightning out of nowhere because it doesn't take near as many orders to bully around the market when nobody's around to get in the way. Okay? So just be aware that you can get some very fast moves. So trade with some caution. Make sure you're trading with defined risk. Or do one of the smartest and hardest things in trading, and that is take a holiday. So, take the week off. I know traders who literally stop trading a week before Thanksgiving and they don't come back till 2 weeks after New Year's, just because the volume changes so much. Okay? I don't do that. I still trade throughout that time. Obviously, I don't trade near as much during the holidays. I'll do a few trades. My risk I always keep in a high check, because there's nothing like dampening your holiday Christmas spirit than, wiping out your account, right? So if you do trade with very light volume. My biggest suggestion for you is make this a time to educate yourself. My daughter Felicity is, this sort of ties in here. She is working with a awesome trainer. Her name is Lynn Brown. And she is working with her in order to get ready for the new season coming up. She has a big award ceremony. She's about to get awarded a saddle for being the number one in every age group from peewee to adult. She's going to get a jacket for being in the top 5. She's going to get a buckle for being number one in the peewee division. And all that's really awesome. And she knows that was great, but it's a new year, a new season. And so she is about to get ready for her next level. She's graduating basically to a lot of new levels next year. Like in some divisions, she'll still be in her age group. In other regions, most regions, she's going to be bumping up a level. So now she's been competing against adults all along, so it's not that big of a deal. But, it obviously it does mean that some of the competitions won't be as easy. And so she is speeding up right there, okay? But to speed up, she's slowing down. And that means she's going back to basics. So what we're doing is we're actually bringing in a really top-notch trainer that trains Division I level riders. So she's a guru of horse training. And so instead of like running on barrels for the winner right now and trying to get faster, she's slowing down. And she's getting her horsemanship, she's mastering it. Because when she was doing this last year, she hadn't even run a barrel race this time last year. She just started in April, and she took world titles and all sorts of stuff this year. But she wants to go even faster. And so one of her horses has been on a 2-month spa treatment break. He's getting all muscled up and ready for the new year. Literally let him he won his world title. He got a big break for that. She's working on her new quarter horse right here that she's had for a couple months, but she's having to learn just mastering basic horsemanship. And the number one rule that Lynn keeps telling her is slow down to speed up. And what you can't do well slow, you can't do well fast. And your errors will only increase as you do them fast. But what you can't do in demo, you can't do in live. What you do with one contract, you can't do with 100 contracts. Okay? So that lesson being said, how do I apply that to trading? Take this time to get ready for next season and to sharpen your skill set. Stay right there. We'll be back right after this break.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so, again, we're just wrapping up with a reminder on the holiday season. Volume's going to be different. If you haven't traded, a lot of traders I know that I've talked to, they're new traders. They literally just started trading this year. Or they were new last time this year. They hadn't really known what they were doing when it was around, this holiday season. And it's something to watch. It's something to trade, but it is a different season. And why is it so different, beyond all the, obviously awesome things that it represents, but people are not there, the same people. It's sort of like, why is the traffic different at 12 o'clock in the afternoon than it is at 12 a.m. as it is at 5 p.m. during rush hour as it is at 8 a.m. during rush hour? Because there's more people. There's different people, okay? When it's icy on the, roads in Dallas, and we have like 2 ice plows for the, 5 million people, there's not that much traffic. And what traffic there is out there usually is on the side of a road somewhere, falling into a ditch. So it's a little different. So different seasons, different things. So if you want to master how to trade this season, which I recommend that you just master how to relax, okay? But demo trade it and see how the markets will sporadically move on you, because it's some scary crap when it happens. Because it'll be really boring and then it'll just explode, okay? So especially around the news. So, watch it, learn from it, or set back and go, you know what, I'm going to work on slowing down and mastering some basics that I need to get really, really down. Making sure I know exactly how I'm going to do my entries. exactly how I'm going to do my stops. I'm going to look back over months of charts, and I'm going to see how well that worked. And really, really work on that consistency so that when things speed back up and things get real and money gets live, that it's automatic. And see, that's one thing, you know, with my daughter Felicity, when she rides, I mean, she can go out there and she can trot and lope, and I mean, it will be perfection. I mean, she'll do it by the book, make a training video and ship it out, okay? But when she goes to a barrel race and there's literally 500 or 600 racers out there racing, and they all smell each other's sweat and hormones and everything else is going on, all those horses, man, they are hyped up. Their nostrils are full throttle. And, I mean, her horse literally doesn't get up to speed. He has what's called a sonic boom. He starts, she turns him, and he is running literally at full throttle within 2 steps. I mean, it's like boom, and he's gone, okay? And he just gets faster and faster and faster. And so as he's flying, that means less time to think about when is she going to turn on that barrel? Where is she going to sit down? When is she going to put her hand on the horn? When is she going to slightly pull on that rein just to make sure he curves it just right? Where is she going to find that specific spot? When is she going to let go? When is she going to stand up out of the saddle so he can take off again to the next barrel? Where is she going to point it? All that goes from having like 5 seconds to having a second to figure that out. Because, I mean, they run on these things in 14 seconds. You know, they're running literally over the length of a football field in less than 14 seconds, and they're doing 3 turns in the process. And so there's only, you know, a few seconds spent. Like, there's a couple seconds in between each barrel, and there's like a second or so at each barrel where they're spending time. And so there's not time to think. It has to be muscle memory because things are real, things are live, things are fast. Use this time to get that muscle memory down so you can come back and have the best trading year of your life in 2016. Y'all have a great day. We'll see you right here tomorrow on the Bull Bear Binary Hour. Stay tuned for Steve Rhodes, the Trader's Edge, coming up next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.